Hey everyone, welcome back to Corporate Decoder, the place where we break down the complex world of corporate filings. Today, we're diving into Coeur Mining's latest update, and let's just say there is a bit of a legal drama unfolding alongside their business updates. It seems even miners can't escape the courtroom jitters. So, what is the big story? Coeur Mining is pushing ahead with a major deal, a business combination with New Gold Incorporated. But, like a tangled ore vein, lawsuits have surfaced, casting a shadow over the whole thing. Let's get into the nitty-gritty of what is happening. Coeur is combining with New Gold, a big deal that involves issuing Coeur stock to New Gold shareholders. This is all laid out in something called a plan of arrangement. Now, two lawsuits have popped up, claiming that the main document explaining this deal, the definitive proxy statement, is missing some important information. Basically, these lawsuits say Coeur didn't tell shareholders everything they should have about this big merger. These lawsuits, one filed by Ryan Carroll and another by Anthony Malone, want the deal stopped unless Coeur spills all the beans and gives shareholders more information. They're also asking for damages and other legal fees. On top of that, Coeur has received letters from some shareholders demanding even more disclosures. Now, Coeur is saying these claims are totally baseless. They don't think they did anything wrong. But to avoid a long drawn-out legal fight, which can be costly and cause delays, they've decided to add some extra details to their original proxy statement. They're not admitting fault, mind you, just trying to smooth things over. These added disclosures are pretty technical, but they mostly clarify some financial analysis details from their financial advisors, BMO Capital Markets and RBC Capital Markets. Think of it as adding footnotes to a complex financial report. For example, they're clarifying how multiples were used in their analysis. One specific update has to do with BMO Capital Markets' analysis of Coeur. It clarifies the range of multiples they use to evaluate Coeur's stock price. They're talking about net asset value, per S-share multiples, cash flow per S-share multiples, and EBITDA multiples. These are all ways financial experts try to figure out what a company is worth by comparing it to similar companies or past deals. The added text specifies the ranges used, like 1.45x to 2.00x for net asset value multiples. Similarly, they've clarified the analysis for New Gold, specifying the multiples used in their evaluation, like a range of 0.8x to 1.35x for net asset value per S-share multiples. These numbers are crucial because they form the basis of the financial advice given to Coeur about the fairness of the deal. There is also an update regarding analyst price targets. The filing now mentions 9 undiscounted publicly available equity research analyst price targets for Coeur common stock, with a range of $16 to $25 per S-share. They also mention 8 for New Gold common shares, with a range of $7 to $10.79 per S-share. This gives a broader picture of how Wall Street analysts view the company's values. Another advisor, RBC Capital Markets, also had its analysis updated. This part clarifies what their review entailed, including financial projections, commodity price assumptions, and even estimates for unmodeled resources. This just means they looked at all sorts of financial data to help Coeur make decisions about the deal. We also see a key update regarding the enterprise value calculation for New Gold. It clarifies that the net debt figure used in the calculation was approximately $371.0 million, adjusted for certain securities. Enterprise value is a crucial metric in mergers and acquisitions, representing the total value of a company. Now, let's look at some of the actual financial tables that were updated. These tables are where the rubber meets the road. For New Gold, under a selected public companies analysis, we see metrics for companies like Equinox Gold Corp and IAMGOLD Corporation. They're comparing things like price to NAV, EV to 2026 EBITDA, and price to 2026 cash flow. What is interesting here is that while the selected companies show a range of multiples, New Gold's multiple in this analysis, specifically its price to NAV at 2.0x, appears significantly higher than the median of its peers. This could suggest that, based on this analysis alone, New Gold is valued more richly than its comparable companies, or that Coeur is getting a good deal if they're acquiring New Gold at a discount to its peers. Then there is the selected precedent transactions analysis for New Gold. This looks at past merger and acquisition deals. Companies like Newcrest Mining Limited and Yamana Gold Inc. are listed here. The arrangement at the exchange ratio shows a price to NAV of 2.3x and 2.8x depending on the discount rate used. When compared to the historical transactions where the median price to NAV was 1.1x. An implied multiple of 2.3x to 2.8x for the arrangement might seem a bit elevated compared to past deals, though it is within the upper range of the precedent transactions. This means the deal is priced on the higher side compared to similar past deals in the market. Moving on to Coeur's own financial analysis, in the selected public companies analysis, we see companies like Fresnillo plc and Pan American Silver Corp. For Coeur itself, the analysis shows a price to NAV of 2.5x EV to 2026 EBITDA of 8.2x, and price to 2026 e-cash flow of 10.0x. These multiples, particularly the price to NAV of 2.5x, are at the higher end of the selected peer group, suggesting that Coeur might be considered richly valued by the market compared to its peers, or that these selected peers are undervalued. Before we wrap up, a quick note for our US investors. Coeur's mineral information follows US standards, while New Gold's follows Canadian standards. While they aim for similar disclosure levels, the definitions and approaches can differ. So a direct comparison of mineral resources might not always be straightforward. And as always, this filing contains forward-looking statements. These are essentially educated guesses about the future based on current information and beliefs. They're subject to risks and uncertainties, meaning the actual results could be quite different. Things like shareholder approvals, regulatory hurdles, and market conditions can all impact the outcome. Now, what is my take on all this? Coeur Mining is clearly trying to make a big strategic move by combining with New Gold. The lawsuits and demand letters, while unsettling, seem to be more about ensuring proper disclosure rather than fundamental flaws in the deal itself. Coeur's decision to add supplemental disclosures is a smart move to escalate and keep the deal on track. The financial analysis tables, while a bit complex, show an interesting picture. Coeur's own valuation multiples in the peer analysis appear higher than many of its peers, suggesting the market may already be valuing Coeur quite favourably. When looking at the deal multiples for New Gold compared to precedent transactions, it hints that this acquisition might be priced on the richer side of historical deal valuations. However, the ultimate success will depend on whether Coeur can realise the expected synergies and manage the integration smoothly. The biggest risk here, beyond the ongoing legal challenges, is the inherent volatility of commodity prices, which directly impacts mining companies. Any significant drop in gold, silver, or copper prices could put pressure on the combined entity's financials. In conclusion, Coeur is forging ahead with a significant expansion, but they're navigating some choppy legal waters. The financial metrics suggest a premium valuation for Coeur and a potentially high valuation for New Gold within the context of past transactions, but the strategic rationale for the merger seems sound if Coeur can execute effectively. Alright, that is our breakdown of Coeur Mining's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think the deal will go through smoothly? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate finance. Don't forget to check out our Discord community linked in the description below for more discussions. Thanks for watching. See you next time.